So today I want to talk about 5 key factors that affect what you pay for housing. What? Can you change that? Absolutely. And I want to explain exactly how you can do that. So stay tuned because we're getting started right now. Hey y'all. Welcome back. I'm Debbie Dobbins. I'm your host for this episode of Your Wichita Falls. And today I want to talk about 5 key ingredients, 5 key factors that affect what you pay for your housing. Well, if you're like most people in the United States or really the world generally, your housing expense is the biggest ticket item that you have that you pay out for your living experience. It's not your car, although some people pay a lot for their cars. It's not your credit cards, although some people have a ton of credit cards. It's your housing expense. So how do you mitigate that at all? I'm going to say hi, Tim, because I recently had a gentleman from California come here who told me he's watched this channel for a year and a half, anticipating coming here to Wichita Falls and making a move from California to here. And I want to tell you that this gentleman has impressed me more than any buyer I have run into, I think, ever. He has looked at everything from every angle, which is what I wish everyone would do. But literally, it's just a decision to buy a home. He knows what he wants. He knows where he wants it to be. And we began the process the other day. And there's so many things that affect what you actually end up paying for that house, not just the purchase price. So I know a lot of you think it's just the purchase price, or if you're renters, it's my rent. The thing is that's why I always encourage you to buy a house, because you can control 5 of these aspects that you cannot when you're renting. You can control your utilities if they're not being paid by your landlord. But think about it from this perspective. And I think it's really so important to take a page out of Tim's book, hi Tim, to really understand how you can put this in your budget and achieve wealth and build wealth quicker and faster than any other way on the planet. So every day I wake up and there's a news segment about the housing market. Oh my gosh. I just did a video called The Housing Market is Dead, or The Real Estate Market is Dead. We hear about this constantly and the affordability challenges. So what is that word, affordability? It's a big bucket. And so I want to break it down for you, because the affordability challenges that buyers are facing today is different than it was, 6 months ago even. And what does that mean? Well, 6 months ago, the interest rates were historically low. Is the interest rate the only thing impacting what you're doing? No, it's not. It's just one ingredient. So when you hear headlines that are focused on how much mortgage rates have climbed, tune that out. Because what you can do is figure out and use these equations and use these key factors to decide something different. Because as I've said many times on this channel, real estate's been selling for, as long as we've landed here at Plymouth Rock. First they were homesteading it, then they just sold it. And real estate will continue to sell. People will continue to buy houses with the interest rates at 18 and 20% or at 2%. It doesn't make any difference. What you have control of are other mitigating factors. And yes, it's true. The rates have risen dramatically in the last 6 months. Thank you, Fed Chairman Powell. And it's important to remember that they aren't the only thing in this equation. So here are some measures that you can use to change that payment amount. Because remember I said if you're renting, you rent for whatever that monthly rent is, and that doesn't change unless your landlord increases your rent. Hopefully you have a lease for a certain period of time. But when you are buying a house, you have control over certain things that a renter cannot control. Now, home prices are really important. And we've seen a crazy 2 years of market with the home prices being super high. And yet you can still get affordable houses. I'm telling you that, even in a crazy market. And really, generally, when it was at its peak, the best way to get a affordable house was to get one that needs a little love. But the home prices affect what your payment's going to be. The mortgage rates affect what you're going to pay, and your wages affect your overall affordability. But let's look at each one of those so that we can tease them out a little bit to determine what is it that you have control over. You actually have control over the mortgage rate that you're going to pay. This is a factor that most people are focused on when they talk about home buying. It's just because the press talks about it so much. And your mortgage rate is determined by a lot of different things. One of them is your credit score. So I've done plenty of videos on how to get your credit to where it is, because an individual with a credit score in the low 6s is going to pay a higher interest rate than an individual with their credit score in the 800s. It's just a fact of life. So you have control over it from that perspective. You also have control over the type of loan that you get. So if you get an FHA or a VA loan, your interest rate is going to be comparatively lower than if you get a conventional loan. However, the offset to that is you pay mortgage insurance or you pay a funding fee. And if you put 20% or more down on a conventional loan, then you don't have to pay PMI insurance. So that reduces your payment even further. Well, I know everyone doesn't have 20% down. So there's another component. There are plenty of programs out there. And now is the time that we're moving into, I don't want to call them designer loans products because that's what we had back in the early 2000s. But adjustable rate mortgages have been around forever. And when you think about where we are, and if you listen to any of this channel, you know that the interest rates I'm predicting, because I know what I'm talking about, they're going to go down in the next 6 to 18 months, probably sooner rather than later. And if you get into an adjustable rate mortgage, you usually can get it what they call a 5-1, a 7-1, a 3-1. Basically what that means, it's fixed for the first 3 years, 5 years, or 7 years, and then it adjusts. Well, most people don't stay in their houses that long, so there's an option. I talked about it in another video recently about a 2-1 buy down, where your interest rate starts at 2% lower than what the average interest rate is, which is around 7% right now. So you literally can start your interest rate at 5%. So these current rates are just seriously crazy. They've gone up almost 4 full percentage points than they were 6 to 8 months ago.
That's crazy.
But here's the thing, is that if you begin to look at how can I change that interest rate from just a fixed rate loan, you can start at a lower interest rate. There's all kinds of programs out there. So think about that, how to mitigate the interest rate. So Freddie Mac was speaking the other day, and they said that the 30-year fixed mortgage rates have increased 3.83 percentage points. Well, anybody that's looking or shopping for a house knows that. So basically it's almost 4%. And the Fed just raised it again, and they're on track to raise it 0.5% in December. And I've also done a video on the historical rates, and 8% is not going to be a horrible interest rate. It's just horrible because you're comparing it to 2. So when you begin to look at how can you mitigate your mortgage payment, think about it in terms of what can I get now that's going to tide me over, because I'm telling you this is a cyclical interest rate scenario that we're in, and it's going to go down. That's the biggest year-to-date increase in rates over 50 years. And there is so much pushback against the Fed right now, and from a bipartisan level as well. So hopefully in the next few months, the administration or whoever's in charge will put some pressure on the Fed, because I've already said we're going to be hitting a recession here. But think about that. Your interest rate is affecting that mortgage payment, but it's affecting your principal and interest portion of your payment. That's number one. But if you look at how you can price out your home with this global market, you can make a choice that's going to allow you to have a lower payment. The rates, as I said, are going to go up one more time, at least. The Fed is threatening it. But the thing is that inflation really is already starting to come down. It's interesting to watch the Fed because it's all the leading indicators are there. However, we are going to be in a little more pain. So What's the second thing you can do to mitigate that? It's the home prices. This factor has not been as accessible in the recent past because everybody was making crazy offers. Now, I will say that statistically, people are still buying houses regardless of this interest rate, and they are buying it with this interest rate. But there's a ton of people buying homes for cash. If you think that we're in a slump in the economy, I can tell you that I see it from a different perspective because there's so many people that have cash out there. Why, you say? Well, one of the reasons is that they've built so much equity in their properties over these last few years that, especially if you're coming from the West Coast or the East Coast, where the property values were so much higher, you sell your house, then you move to our beautiful state of Texas, and especially Wichita Falls, you can buy a house outright for cash, which is fantastic because that mitigates not having to worry about these interest rates. The sad thing is there are people here, unfortunately, especially in our community, that haven't had that much appreciation that can afford to buy a bigger house here locally. So it sort of works from the reverse of a bigger community to come to a smaller community. But I always recommend, that's why people want to come here. But the home prices have made headlines over these past few years, no doubt. I mean, I've experienced it firsthand, and they have skyrocketed, and it's been annoying as a realtor to try to get a house for somebody because we've had overbidding for properties for overvalue. It just is a fact of life. But it's brought all the values up, and they are up, and they are not going to come plummeting down. However, they are softening. And there are sellers out there right now that are willing to make a deal because they need to move, especially in our community. The military base turns over, high interest rates or not. The military personnel have to move, they have to sell their house, and they may have to take a little bit less than what they want to, but most of them have owned their house for 3 years, so they've already established enough equity that they can do that, which I find fascinating, that people think, well, I can't sell my house because the market says it's worth this, but you've managed to achieve so much equity in it over the past couple of years, you can come down a little bit. And I'm not saying a ton, but there are deals to be had out there. So the most recent home price index shows that values continue to decelerate just a little bit for the 5th consecutive month. Well, what does that mean? It's just, look at this graph here. It's not overwhelming, but the thing is that when people have come out of an experience, just like with the rates, they experienced the rates of 2 and 3%, and now they're 7 and going towards 8. You think in terms of what it was instead of in terms of what it is and what it has been historically. So deceleration is basically a really good word for just allowing the prices to soften some. It's happening because higher mortgage rates are moderating, number one, how much people are qualified for. So if 6 months or 8 months ago you were qualified for a $200,000 house, maybe your payment now can only be for a $180,000 or $170,000 house. So you are going to have to come to dial back a little bit on your qualifying. However, talking about these next items, you may be able to get your qualifying item up a little bit more. But easing this buyer competition, because some people have moved out of the market or they've changed how much they can buy, it's then slowed down the bidding wars. Thank you. Because those bidding wars were not helping anybody, not you as the consumer, especially if you were trying to use a loan to get financing and being outbid by cash buyers, because unfortunately cash is still king. And it's worth noting again, you want to take things and put them in perspective, that these home prices, these higher home prices are still higher than before the pandemic. So when all this started, and you can watch all the videos about why this happened with the market, but we're going back to normal. And I've said that on several videos. We have a longer way to get to a normal level than we were before, but home prices are going to continue to appreciate just as they have historically. And usually in the Wichita Falls market, that's between 3 to 7% a year. That's just normal. So as I said, real estate's always a great investment.
That is true.
But when the real estate rates and the home prices are high, it feels a little crunchy. So there's some things you can do with your affordability and your purchasing power. It may seem challenging, but you have to look at it from the perspective of that there's other factors involved. So I will say, and I've said this many times, that in Texas, people are still coming here in droves. I did a video the other day about Californians moving to here, and 100,000 of them are exiting California to get to Texas. So we still have a lot of influx of people into Texas, which was before the pandemic, and it will continue after the pandemic. So prices are not going to plummet, but they will flatten because also people are just scared at this point. So my mission in life is just to say, stop being scared and let's just live our life as normal. And in our market, everything that happens in Wichita Falls is not as dramatic as everywhere else. So even during the craziness, and I've done videos on that as well, that in the market of the Dallas Metroplex, there were 25 offers on one property where we would have 4 or 5, which seems really difficult for our market. But at the same time, our market has slowed down to normal. And our normal market here is to be listed for 30 to 60 days before it sells. That's just normal here. What's happening in your area is what you really want to know from a real estate professional is, how does your market work? So it's incumbent upon the real estate professionals to look at the overall picture of what it was in the crazy market, and then also put it in context of what the normal market is, which we are in basically moving into a normal market. The third mitigating factor here are wages. And this one big positive component in this whole affordability equation is that there has been an increase in American wages. I know some of you may not think that because, well, it's just a mindset. But literally, if you look at things prospectively for the past 2 years, I remember I left California 4 years ago, and the conversation at that point was the push to have a minimum wage for the whole United States of $15 an hour, which didn't make any sense. It made sense for California, but it didn't make sense for some place like Wichita Falls, which was a community where the wages were already low because we have a smaller community, we have a lower cost of living, and all of that stuff. Well, because of this pandemic, because of the craziness that's happened in the last couple of years, I don't know if you've noticed it, but wages have increased just basically for most jobs. Now, I'm not saying all of them, so don't hold me to that. But for most jobs, at least to $15 an hour, $12 to $15 an hour, and more, because people make way more than that, a lot of people. But that just goes to show that this increase in wages has also helped with where we are now, because without this increase, then people would be building wealth faster, which is a good thing. But the Fed would like to see you be unemployed, frankly. So think about it, though. If you really pay attention, has your income gone up in the last 2 years? Well, if you say no, the graph behind me says the data from the Bureau of Labor Statistics shows the wages have grown over time, and this year is no exception. So it's grown, and what that also helps is it helps you then afford those houses that seem like they're out of reach. The Bureau of Labor Statistics said that the median weekly earnings of the nation's 120 million full-time wage and salary workers were 1,070 in the third quarter of 2022. This was 6.9% higher than a year earlier. Now, I understand that house prices have gone up over 12% in this last year of 2022, but they've come down a little bit as well. So what is happening is the income is keeping pace with the rise in prices. because I know you're feeling it at the pumps and the grocery store and in your housing. So when you think about affordability, remember this full picture includes more than just mortgage rates. As I said, home prices and wages need to be factored in as well, because wages have been rising. And statistically, even though the Bureau of Labor Statistics says what it says, I know for a fact that people are moving out of the job market and doing side hustles, the gig economy. They're starting their own businesses, which then also gives them an increase in income. So when you think about it, where were you 2 years ago and where are you now? And if you say there's no opportunity, I can tell you, I see hiring now all over the place. And it's that way across the country because I talk to businesses all the time. That's a big reason why serious buyers are still purchasing homes. Just is. People that understand that home ownership or real estate investment is the best investment continue to buy houses. I'm one of them. When you think about all these factors, you want to get somebody to actually help you strategize about these various aspects. And the National Association of Realtors says buying or selling a home involves a series of requirements and variables. And it's important to have someone in your corner from start to finish to make the process as smooth as possible. I think one of the greatest things that Tim also had, hi again, Tim, is that he is surrounding himself with people that aren't even here on the ground, but that he can rely on to bounce all of these ideas off of the house that he's ultimately going to buy, the prices, and all the other factors that we're talking about. And they are objective and they deliver this great trusted expertise or advice to him. Then we're working together as partners because I know boots on the ground what's going on here. So it's a really great team. So you want to put together a team of people in your life, including your professionals, mortgage person, real estate person, insurance person, that can help you with this. And the fourth component is taxes and insurance. Your mortgage payment is comprised of principal and interest, which is the interest rate that we talked about, the amount of your loan, which is based on your purchase price, and then taxes, insurance, and also mortgage insurance. What you want to do is find a lender that gets great mortgage insurance rates if you don't have that 20% down, number one. Number two, you want to understand how taxes and insurance work for where you're buying. Now, I've expressed we have no income taxes in the state of Texas, which is a mitigating factor to all of this as well. But property taxes, depending on where the home or the property is located, can be very high or very low. In Texas, we have property taxes that consist of city, county, and ISD, which is the school district. And then depending on if you're buying in a newer development, you could have mud taxes, you could have toll taxes, and a whole plethora of other taxes. So thinking about this, if you're looking for the most cost-effective property, you don't want to just buy in a neighborhood because the house is just so pretty, instead of paying attention to what is that going to do to impact your overall taxes, because the taxes are part of your payment divided by 12 if you pay through your mortgage payment, or in the alternative, you can pay it yearly. But the fact is, you still want to pay attention to how much that is. And Tim was so smart, he figured out that there are some rural areas here that are not technically in city limits. So guess what? City tax went away. So then there's county and school. Depending on the school district itself, it could be higher or lower. And if you've got kids, you probably want to be in a good school district. But if you don't have kids, maybe that's not relevant to you. So taking into consideration how much your taxes, your property taxes are going to be, plus you want to make sure you file a homestead exemption. If you're VA disabled, you want to file that exemption. There's all kinds of things that can keep those property taxes lower. The other really big component in your payment, besides the mortgage insurance, is your insurance. So most people really don't get that your homeowner's insurance can be so high based on the age of the house and the square footage of the house. And I've seen this time and time and time again. Somebody will come to me and they're saying, oh, I found this $75,000 house. It's 2,000 square feet. I love it. And it's in kind of bad shape, but they think they can fix it up. That's great. Because at the end of this conversation, you may not even qualify because your taxes and insurance are so much higher than just your principal and interest. It's not just your interest rate. It's just not the interest rate. It's the interest rate. It's the purchase price. It's how much income you make. It's the taxes, insurance, and mortgage insurance. All of those things factor into your payment, which, circling back, you don't get to make any of those choices when you pay rent. Your landlord says, this is how much your rent is, and maybe if you're on a lease, you won't get your rent raised until the next year. Now, they are paying and mitigating those things if they choose to. And this last item that mitigates this is just your own ability to research, to find yourself a team, to surround yourself with those people that can help you make these decisions in a really pragmatic way. We've moved out of this emotional market because emotions were running high when there were multiple bids on a house and you just really believed that you weren't going to get one. You've made so many offers. We're not in that market anymore. So you can take a beat, you can slow down. Not saying every property is like that. There are still some properties that are hot properties. They're going to go like that. But just think about how you want to make that payment be as little as possible. Using all of the tools I just shared, doing that research on your own behalf. And as I said, Tim has been researching this channel and Wichita Falls for 1.5 years. He's methodical. How methodical are you? Maybe you're in a hurry. Then you want to get a person like me or my mortgage team on your side so we can accelerate the research process for you. But I will share with you that every single time I help a person purchase a house, I'm looking at all of those factors so that they can see exactly the direction that they're headed before they sign on that dotted line. So if you want to know any more about these great ways to keep your payments lower, to build more equity in your house, there's a Zoom link in the first comments below. I encourage you to schedule a Zoom meeting with me and I'll be happy to share even more information with you. There's 2 more videos coming up. And as I always say, y'all come back now, you hear? Bye.